As of November 14, 2024, natural gas and related ETFs, BOIL, KOLD and UNG show a mixed fundamental outlook, increased demand expectations due to economic growth support and optimistic view. However, high interest rates and mild weather forecasts could limit price gains. BOIL may benefit if bullish trends hold, while KOLD remains favoured for those anticipating further downside. UNG's outlook will depend largely on natural gas's ability to sustain recovery momentum amid these mixed conditions. G'day folks, welcome back to another update for natural gas. Before we go any further, make sure you hit that like and subscribe button to support the channel. So first off, we look at the trends for our monthly, weekly and daily trend charts. First off, on the monthly, we're still above the moving averages of the CCI 150, and for those new to the channel, these moving averages on both the price and the CCI can be found in the description below in terms of those videos. So you can see there both the CCI and the price is broken above the moving average, so a bullish momentum at the moment on the monthly. On the weekly, it's been bullish also for a number of weeks, both above on the price and the CCI. And on the daily chart, if I zoom in on that one, you can see there it's also broken above. Now notice we've broken through this minus resistance at 30.96 and currently heading towards this key resistance at 31.94. Now we may see a bit of a pullback from here. If we go to the intraday charts, again we only trade in the direction of the daily or the larger time frame. So if you're trading on the hourly, we're taking the direction of the daily. So we're going long only, we don't take short trades. So you can see here on the hourly, we've already broken through this minor resistance, as I said, 30.96. But notice it's actually gravitating back towards that resistance. It broke through, it hit it once, bounced down, broke through it very lightly, and now it's gravitating back towards it and moving back towards the moving average of the price chart. But notice also the CCI has broken into that moving average range, and it may well break into the bearish momentum in the coming hours. Now again, we only take long trades based on the daily if you're trading on the hourly, so you would have only taken a long trade back there when it broke above the moving averages of the CCI 150 and the price, and you would have ridden it. In this case, I prefer to get out when it hits the CCI moving averages at that point there. So very small gain. You can of course ride it with the price moving averages, but sometimes they do break down a lot quicker. So it's on average, it's probably better to take the CCI moving averages as a exit point, depending on your preference, obviously. Now notice here as well on the hourly. Let me just zoom in on this one. If I draw a trend line from that peak to that peak, it's hard to see there, but there's a trend line, lower highs on the CCI versus the same points, higher highs on the price, and that's a Fibonacci retracement there. That's a bearish divergence. So if we draw a Fibonacci retracement from that first point, we always pick the closest Fibonacci range as a minimum target. So if I pull it back to that level, between a 23 and a 38% level, you can see there it bounced in that range perfectly, and it bounced off that 38. It doesn't always bounce from there. Sometimes it breaks a lot lower, but that's a minimum retrace level. You actually broke into it back here, but then it gravitated back towards that range in the coming hours after that. Now, since then, it's broken higher, the price, but notice as well, we've got another bearish divergence. So from that point, lower high there versus high on the price. So again, on this one, if we extended that Fibonacci, at the very least, we're going to expect a pullback, assuming it starts pulling back from there, let's draw a target there, that 23-38% level. It's very similar to this one, but slightly higher in terms of a 23-38 range. So as long as the CCI keeps falling and the price keeps falling from there, we're going to consider that a minimum target range. Of course, it could go higher. If this price breaks higher, starts bouncing off that minus resistance, and then we expect to see the CCI move higher as well. We're going to watch it and see how high it goes. Alternatively, if this starts breaking to the downside, we're going to consider it hitting this target. Now, if I zoom back out to the daily, notice we don't take short trades. I don't trade these divergence. I just use them as potential exit points or a early warning message. So we only take long trades based on the daily, and you would have taken a long trade on that one as well, based on that daily chart. So you would have gone long there, and again you would have exited on that green candle just before it broke into that red candle there when it hit that moving average range. At the moment, you wouldn't be in a trade because going long only, and you want to wait for this to break to the upside to go long again. Now for BOIL, notice we're going to a pretty steep decline on the monthly. There's no CCI for it, so that's a bearish momentum. On the weekly, we do have a bullish momentum on the bullish divergence on the CCI versus lower lows on the price, and that actually hasn't started to move to the upside. We want to see it break a lot higher than these moving averages. It did some degree back here, but then it pulled back towards this bearish movement. On the daily, again, it's broken above the moving average of the CCI, and it's also broken above on the price chart as well. It's actually bounced off that key support at 35.98, and we'll see how far it goes, but that's the resistance, the key resistance at 61.05. We'll take this one step at a time, and if I was to draw a anticipated target areas, I would draw a Fibonacci range between that high and that low. You can see there it's currently hovering a midpoint between the 23.38. Also notice there's a bullish divergence back here versus lower lows on the price, and that's already hit that target range. So let's mark that right now between that range there. So for this to start breaking higher, we want to see it break above this 61%, which is a key area, for it to then potentially start approaching this key resistance. But at the moment, we'll take it one step at a time and see how far it goes. If it keeps breaking through these Fibonacci levels, then we'll see, we'll measure it one step at a time. On the intraday, again, taking a long trades based on the daily, you would have taken a long trade entry there. Now in this case, it broke down slightly, still remained above the moving averages of the CCI, and then it finally broke into that move. So it would have been about a break even if you entered there. Would have been a break even, and you would have had another entry at that point there, and you'd still be in a trade today. So just watch it carefully if it starts breaking into that moving average range to exit the trade if you're going along. So for KOLD, that's bullish above the moving average of the monthly chart. There's no CCI on the monthly. On the weekly, it's both bullish on the price chart. Actually, no, it's broken into the neutral range of the price chart, that bearish candle for this week so far. And that CCI is starting to pull back as well towards its moving averages. So a neutral positioning on the weekly. On the daily, massive drop, massive gap down and below the moving averages of the price chart. Also a break below the moving average of the CCI. So that's a bearish move at the moment for KOLD on the daily. And if we go to the intraday charts, again taking short trades only based on the daily, you would have taken those short trades based when it broke down below the moving averages. And you'd still be in a trade today, taking that short entry there on that one, on that red candle. You'd still be in a trade today with the CCI still dropping and moving forward. Now you'll notice on the daily as well, we've got this minor support at 61.65, so that'll be our next level of support. You could possibly want to put a target level in there, possibly just above that support level if you're going short, or but to be more conservative, wait for that to break into that moving average range of the CCI to close your position short. So for UNG on the monthly, it's bearish on the price chart, but notice the CCI is broken into that a very narrow moving average range. That's a neutral positioning, so avoid going long or short if you're trading on the weekly. On the weekly, we do have a bullish divergence, higher lows on the CCI versus lower lows on the price. And again, nothing too dramatic to break out. We want to see it break a lot higher than that and probably break above that previous high at that point to be more bullish. On the daily, if I zoom in on this one, you can see there it was bearish for a number of weeks, and it's finally broken above that moving average range. So only taking long trades on the intraday. It's broken above on the daily price chart, and also above the CCI moving averages. Now it did bounce off that major support at 12.57, and also the minor at 12.96, and now it's approaching this minor resistance at 15.20. So I'll keep an eye on that. On the intraday, again taking long trades only based on the daily. You would have taken a long trade there the first time at that point there, and you would have exited near that high there, so a small little gain on that one, and you would have taken another long entry on that one, and you'd still be in a trade today, and wait for that to break into that moving average range to close out your position. To support the channel more, hit that like and subscribe button and share the video. For added benefits and the cost of a coffee, consider subscribing to the Patreon page, where we look at weekly scans of bullish trending shares and insider trades that may have occurred. Thanks again, and see you in the next video.